$38,000 Bitcoin, guys. Markets are bullish. We have options expiring potentially at the end of today. We have max pain prices. We have a ton of news. But today, guys, we're going to jump into all of that and what to expect for the bullish December. Guys, it's time to discover crypto.
Capital flight is coming to the United States. The dollar is going to zero.
And that's what makes Bitcoin so special.
You have to have gone through a couple cycles to understand.
Once the price is able to clear this level, the breakout is on its way.
This is your indication to jump in now.
Guys, we have a $38,248 Bitcoin right now. It is going crazy with the markets. Markets are all green. And today, of course, I have the fabulous Kelly joining me today. How are you feeling? Charts are bullish. It's got to be a good day.
Hey, you know what? It's a week of thanks and giving. The market is giving us thanks for being patient and hodling. All you getting chopped out from your emotions. I'm telling you, get in BitLab Academy and learn about how you can use the strategies. But I'm feeling grateful. I'm happy to be back here with you.
I'm excited for you to be joining today. We got, okay, let's look at the charts here. Bitcoin just going up crazy right now, $38,248. Ethereum now past $21,124. BNB up to $235, up now 0.5%. Still kind of coming back from all the FUD with CZ this week. We have XRP, 62 cents. We have Solana at $58. And for the top 10 guys, those are going to be like all kind of moving the same. But if we go to the 24 hours here, Blur is still leading the network here at 64 cents. And a new project that's kind of starting to make up a storm. It's a few days old. It looks like it hasn't been out for a week. Pyth Network, which is going to be another Oracle play. So welcome to the industry. We need more Oracles. We need more decentralization on that aspect. I'm a huge fan of Chainlink, but even Sergey Nazarov says all the time, we need to see a little bit more disruption in that industry. So this has actually been a huge mover behind the DeFi industry, like Synthetics, which is a perpetual traded contract. We have them providing now data for more DeFi protocols. So it's really cool to see them up 24%. We have Mina still leading the industry with 75 cents now, up 27 cents in the last few days. What are you watching? Have you seen any of these cryptos? Are you holding on to any of these cryptos? I know you're the TA guy. So,
well, you know what I love about this is you were talking about the Oracle plays. Chainlink absolutely has just a stranglehold on cornering the market in that niche. But when we're thinking about anything that's going on in crypto, we have to remember this is a nascent technology. It's still very new. And every one of these different protocols as they come out, when they lead the way, for instance, like Ethereum, leading the way with smart contracts and having the largest smart contract ecosystem and being among the first to do it. Then what we saw was Cardano and name all the other ones, Near, AVAX. There's so many out there. And what you could do is you could use a roadmap of what Ethereum did and where it was successful. And there was a lot of speculation jumping into those plays to catch that speculation driving it. So same thing with when you see Chainlink, it has performed so well, and they are the market lead in that. There's going to be no way to tell if Pyth Network is going to endure in the next 10 years. But what we can count on, especially in crypto, is the speculative plays that happen from it. People are going to think they miss Chainlink or think they miss Bitcoin or think. So there's going to be new money and speculative money that really plays into those kind of narratives. So it's always, especially with how big these layer one platforms are, looking, and TJ talks about a lot, you talking about a lot, look at those layer two options, look at those competitor options when they do come onto the market, because you can get at least, you can capture some of the movement early on in those fields. Now, I would not recommend, because you feel like you missed any of these other ones, that you throw 100% in this new thing. No, you throw some capital into it, be smart, and if it explodes, you rotate your capital into those larger holdings in your portfolio.
Yeah, look, I think you said the key word is speculation here. You never know which one's going to be that mover. And we do have a Chainlink Maxi. I'm just kidding. Marine, though, behind the cameras operating today here. Drew, how are you feeling about Pyth? Are you excited to see more oracles coming into this market? I know I am, because just as Kelly said, we need that diversification. And even though people want to hold on to one asset, that's just not how this industry works, especially when the founder of projects like Chainlink are even saying that we need more decentralization. So where's your head at with this, brother?
I mean, competition breeds innovation. You know what I mean? So that's the whole thing that people got to keep in mind. It's good to have competing networks that work harder and harder to be the best. Oracles are going to be a huge play. And, we got to figure, the way I look at it is we have to play, my focus is on the data-based projects and Oracles first, because I think that's the first thing we got to overcome to really see a mass adoption of crypto.
Definitely.
It's a pinpoint, it's a funnel point of information that needs to be worked on first and foremost. And then all of our favorite layer ones will benefit from that expansion. So gotta keep
plus one for Drew, brother. I agree, man. And guys, make sure you smash that like button today. We're moving straight into the news here. Crypto markets are bracing for a $6.5 billion Bitcoin and Ethereum monthly expiry. So what is ahead for these markets? Is this bearish? Because if you guys don't know, I'm sure you've heard the term max pain price. And I mean, you have so many different traders out there, so many different creators, so many self-proclaimed financial gurus using new buzzwords to fearmonger or hopium, putting on that gas, just like, whatever they need to pump the markets. But 108K Bitcoin options of notional value today, 4.05 billion, are set to expire on November 24th, which is today, guys. So happy Thanksgiving, but with a put call ratio of 0.83. So what this means, guys, is we have a max pain point of around 33K. So yesterday on the stream and throughout this week, I've been showing a lot of the liquidations. How about there's a range between 33K up to 34,800. And this essentially just means if prices move to that point, if prices move to that price point, that is going to be the max pain and hurt the most amount of retailer and traders on the market. But that does not hurt one person in particular, which is going to be the market makers. They make a ton of fees off that, and they get in, kind of hands-free, wipe themselves off in a mass amount of profit. So we see 1.2 million ETH options of notional value, 2.48 billion, are about to expire with a put ratio of also 0.72, so very close to Bitcoin, with its max pain price at $1,700, which is significantly lower than the price here, as it says in the chart, compared to Bitcoin, which is only, it's still $5,000, but for me, I feel like that's really not that big of a move. If like 38K down to 33K, I still wouldn't be shocked. Like it does not take that amount of that much money to push prices. There's so little volume on these exchanges. Market makers can move candles very quickly.
Not only that, the 33K level, I was calling for, I don't want to say calling for it. I was outlining it as an as a possibility for if price does move down, it would be an understood area, an expected area safely for Bitcoin to move down to that $32,000 to $33,000 region, because that's basically in the region of where the previous range high was that we broke past in this move. Now, on the flip side of that, tying back in what you mentioned earlier with Binance and CZ, consider, okay, we have an options expiry. It could push us down to 33K. Well, my question is this: if this massive DOJ enforcement action comes down on Binance and $4.3 billion, right? It's easy, maybe going to jail. It's this huge, one of those things that everybody thought was going to be the worst things in history, or what would happen if Binance had some huge DOJ action. Price action didn't move down at all. So is an option expiry going to move it down there? I would, we're already seeing,
I don't believe so. You know, it's and perfectly with the next article that leads into the Bitcoin supply, which there is less supply than ever on these exchanges. So would it shock me if I saw miraculously, a bunch of billions of dollars worth of liquidations get liquidated and some market maker run away with that? With everything that's happening with CZ and Justin Sun and the DOJ investigations, some billionaire trying to take their money and run before, they get sought after? Not necessarily, but markets are extremely bullish, guys. This is why we're so excited in these markets. Bitcoin, again, breaking that 38K level. But guys, look at this. Bitcoin supply inactive for a year, it's record high of 70%. And what this goes to show, guys, as this chart just holds up further and further, people are waking up to the fact that these three-letter agencies and these regulators are not politicians. It's not politics. It is straight up force, and just they're forcing us into policies and regulation. By regulation, by enforcement. That is why it's called that. And this is, not fading anybody. The FUD is not getting to us. Holders are holding more and more longer term, and we're seeing more and more adoption worldwide. So it is really bullish to see the fact that even though CZ got attacked by the DOJ, was forced to step down. If that happened in 2021, we keep saying this, that would have been detrimental to these markets. We would have seen way more volatility. So I think that's where we're seeing it, is more people are like, look, Janet Yellen, Gary Gensler, everybody running the Federal Reserve, we know they're going to print more money one day, and we know that this is the solution to that. So,
well, in addition to all this, where we're at within the market cycle also changes the impact of different types of narratives and how they're going to affect the price of that asset. In this case, when FTX collapsed, that was already after a year plus of just cascading failures from BlockFi, Voyager, Celsius, Luna. I mean, it was the whole market. It was crazy. And so that there was already a bearish fear and uncertainty. And then when you get that sort of impact on an exchange failure, that caused a massive drop in price. Where we're at right now, you have to weigh. This is important. Everybody out there, listen to this. When you're doing technical analysis, fundamental analysis, or just trying to figure out what the hell is going on in the market, look, especially with Bitcoin, look at the Bitcoin halving cycles chart, where I try to identify where you're at in that cycle. Are you in a bear market period? Are you in that accumulation period? Are you going into the pre-halving period? Are you just post-halving? Because depending on where you're at in the market cycle, the impact of some sort of FUD narrative, even if it's a true FUD, like the Binance thing is not a fake thing. It's not just like some fake sculpted FUD. I mean, this really happened. The DOJ brought these charges against, but where we're at, knowing that we have Bitcoin spot ETFs on the horizon, and some would argue that maybe this is one of those things clearing the way towards that.
Oh, it was definitely clearing it. You see it with the Grayscale Bitcoin Trust. It just hit all-time highs. So we know institutional investors are flooding in here. It was very clear. This is why I actually was talking about Larry Fink years ago, being like, okay, BlackRock's here, the money's here. Man, foreign entities, they're screwed. They're going to get pushed out pretty quickly here. And guys, Bitcoin's still pumping 38,400 now. Make sure you keep smashing those likes to pump it to 39K. Let's get to 40K by the end of this stream. But guys, the Grayscale Bitcoin Trust has recently demonstrated a remarkable performance, closing a year-to-date high and marking a 266 increase year-to-date. For you guys saying that, we're not in a bull run, this is for the Bitcoin Trust. Bitcoin itself is up like 150, 160% now. Like, at what point will bears and just people admit, or the Jim Cramers of the world that are just continuously wrong each and every single day and continue to validate the reason behind why an economics degree means absolutely jack poop in this industry? It's just time in the market. When are they going to admit it? Like, markets are up. Markets are good. The recession didn't come. A soft landing, I still think it's out there. It's coming, because I do not trust Janet Yellen with all this transitory soft landing, any of that stuff. If you look at macros and everything, the markets are good right now. And in the same timeline as this, guys, other crypto equities such as Coinbase and MicroStrategy fell short of matching GBTC's feat. Despite being on the cusp of reaching this year to date's highs, they have not managed to breach this threshold. Now, this is a little bit bearish towards Coinbase. However, what I do want to point out, and I don't have the chart up here, I'll try to pull it up for the end of stream for you guys. Guys, since Binance was attacked by the DOJ, the Bitcoin inflows has been flooding out of Binance and directly into Bitcoin. It's completely doing this like an inverted yield curve, because it's just absolutely grabbing all of the outflows from Bitcoin and the FUD on Binance, which is good to see. Good to see on both sides. Huge announcement, though, coming out of the evolution of the World's Bank perspective on Bitcoin mining. This is something I'm a huge advocate for. I'm a nerd for this, guys. In chat, spam 1 if you think Bitcoin's bad for the world, and spam 2 if you think it's going to change everything, because I fundamentally believe that Bitcoin is not only the most misunderstood asset in the industry, it is also going to be the world's greatest commodity, and that is because of Bitcoin mining. People fade Bitcoin mining all the time. They say this is bad for the environment. They say this is bad for production, that it's slow, it's outdated. And Bitcoin mining not only is the most secure network out there, it is able to capture an illiquid market of negative energy and wasted energy, which is worth billions and trillions of dollars globally, and convert all of those carbon emissions, all of those wasted emissions, and turn it into a net value. Satoshi Nakamoto planned this and called this all the way back in 2010 when comparing it to gold. That is why I'm bullish on Bitcoin mining. Not because some retailer wants to use it, pay for his groceries. I'm bullish on it because we need fossil fuels in this economy. Our infrastructure, we have railroads just completely pushing trains over liquid toxic waste. That doesn't necessarily have anything to do with energy, but it does with transportation. But our infrastructure for our power lines, everything can't support renewable energies. And so we need a product, we need a solution that can allow us to continue to mitigate carbon emissions and still print a mass amount of fossil fuels as we develop this over the next 50, 60 years. And Bitcoin is that solution.
Yeah, and I mean, in addition to all that, if you really believe, whether or not you believe in global warming or not, I think we all believe that we want to have a clean planet, right? So whether or not you want to have the argument there, and if you do want renewable energy to progress and evolve to be more efficient and also integrated in more places, the number one means to make that happen is to make it financially incentivized to do so. If you think you hate Bitcoin, you can share this with all your friends and family that have this argument. If you think Bitcoin's bad for the environment, say, and you want the environment, the evolution and renewable energies to progress, let them know that all the things you just mentioned not only drive the ability to harness lost energy, because there's over 30% of the energy already produced each year is just lost.
Yeah.
So you can literally do nothing, produce no extra energy, and just utilize the stuff that's already been done. But then in addition to that, we can offset, basically energy grids like we saw in Texas when they're having the energy grids completely overwhelmed.
You can do landfills.
Yeah.
Like the landfills and methane emissions that is like terrible for our environment. We can convert that into energy and help produce value and more community development there. And this article shows this. It explores the evolution of central banks' views on Bitcoin mining, guys. You know, the Greta Thunbergs out there, which in my opinion is the Jim Cramer of climate change announcements, as well as, Klaus Schwab, the World Economic Forum, all these people, guys, they're highlighting key milestones and shifting perspectives with a special focus on the recent endorsement by the World Bank, which emphasizes the positive impact of Bitcoin mining on methane mitigation. Wow, and I got ahead of myself. Now, Dennis Porter right here, really cool guy. I got to interview him once.
Porter's awesome.
Awesome guy.
Yeah.
I had him on a show on my previous podcast, and really, really smart, talented guy. But he puts breaking news, guys. Members of Congress write letter to the EPA, scam. Sorry, there's something in my throat there. Yeah. Over concerns with Bitcoin mining's energy consumption. And of course, guys, these Congress officials, these are the Elizabeth Warrens, these are the Janet Yellens, these are the people screaming out and saying, oh, this is bad. And they're just literally being fed by their, politicians and lobbyist groups. They can't think for themselves. And they continuously show, guys, that over time, one of the early criticisms of Bitcoin mining was its perceived excess energy consumption. Oh, it consumes more energy than the entire country of Sweden. Oh, it consumes more energy than all of Southern Africa. And they don't realize what energy it's consuming, and they don't realize how this actually can benefit and impact us in the future for utilizing that energy.
Isn't Bitcoin actually, when there a report that came out recently, when they did all the audits of all the faked reports that were done with the misinformation, that Bitcoin is actually among, if not the greenest, most sustainable industry in the world now?
Oh yeah, they'll leave all that out. Yeah, it's like 60%. It's like based off renewables. A lot of it's each and every guys. As we approach a Bitcoin halving, right now transactions for miners are extremely profitable, and this is beyond bullish. Like if this doesn't make you bullish, I really urge you to research into Bitcoin minings and the adoption, because as they get that halving come closer, and once that halving takes place, it forces miners to become more technologically innovative. Yeah. It forces them to find cheaper energy. It forces them to find negative energy, right? They want the lowest cost of production possible to secure that network. And as the technology advanced, guys, as we can see here, so did the methods of Bitcoin mining, what I'm talking about right here. Some mining operations began to utilize renewable energy sources, as Kelly just mentioned, such as solar and wind power to mitigate their environmental impact. A groundbreaking development in the evolving perspective on Bitcoin mining came with the World Bank endorsement of its role in methane mitigation. In a recent report, the World Bank acknowledged that Bitcoin mining could be a major benefit in the efforts to reduce methane emissions. And this comes right here to Simply Bitcoin. It looks like the World Bank cites Crusoe Energy, which I talk about all the time on my channel. Amazing people. They're one of the spearhead innovators in this industry. A lot of great projects out there. They are directly working with the World Economic Forum. They are directly working with the World Bank. And some people, that might be a turnoff, but the reality is these people control that narrative. So if we can get in and help, kind of punch that system, that is exactly what they're doing here. And the perspective on Bitcoin mining, guys, is evolving from skepticism to acceptance. And this, guys, I'm going to end it here before we go to the next article, because I can talk about Bitcoin mining and it's very boring, but it is so bullish, guys. It's so freaking cool, because you have to realize what this means. Any country in the world, this is a solution from the economic hitman policies that China and the United States has embedded on all these countries, whether it's Ecuador, Mali, Indonesia, Ukraine, Israel, wherever it is. These economic hitman policies we continue to utilize and indebt these nations as a loan shark. Bitcoin mining is geologically decentralized. And that is a beauty of it. It doesn't matter where their gold supply is. It doesn't matter what the natural resources is. If it's hot, if it's cold, they can access this network and start to mine and change their countries. And you're seeing this with El Salvador now. In 5 years, they're going to look like kings, in my opinion. In 2 years, you're going to have more countries. Right now, I think we have Argentina, pro-president coming in as well. This is something that can be done anywhere. Tonga, Honduras, Central African Republic, they're all starting to utilize this energy. And it's extremely, extremely bullish on Bitcoin's price. But we're going to move to some TA here. So Kelly, if you got any final thoughts
I mean, let's
Let's
jump
hit
in the charts.
baby.
The charts are looking excited. By the way, everybody here, I hope you're all having a great week. And if not, I hope these moments with Josh and I and us here at Discover Crypto can bring some positivity into your day. Hit the like button. Drop your emojis in the chat if you got any there. If you're members, shout out to all the members that are here. But I want to talk a little bit first about you mentioned GBTC, and this chart right here is essentially, this might, like, what is it? Just a purple line on it? No, this is a premium. You have positive premium and negative premium. And why this is important, even if you're not interested in buying GBTC, which is the Grayscale Bitcoin Trust, this is essentially, as Gary Cardone called it on one of the tweets he put out, this is kind of like the canary in the coal mine right now, about not just looking at the Bitcoin halving chart, not just looking at the market cycle, but looking at this negative premium. What does this mean? This negative premium means that you're essentially getting more exposure to Bitcoin than you're paying for. It's basically you're buying Bitcoin at extreme sales. This got all the way down to minus 48%. So you can almost get 2 for 1 in your Bitcoin exposure on the GBTC. Now, the reason this is important is because when we're coming into a stage right now, a phase, this is like Bitcoin's growing up. We're right at the edge. We don't have a driver's license yet. It's got its learner's permit, but you know what? We have institutions not only on the horizon. They're not going to just start looking now. They have teams of people. I'm seeing it in industries across the world. They're hiring teams of developers and people that understand Bitcoin and crypto to bring Bitcoin onto their balance sheets.
Yeah.
And we have the fair value accounting rules that have changed. So now, especially in the US, they're not going to be worried about buying it in February, having it drop 10%, and then it grow 200%, but they can only list a 10% loss. So it's becoming more attractive. And looking at this chart, as long-winded as it seemed, this shows you that people outside of the active crypto people, all of us degens here together, this is institutions and the mom and pops and the retail. The interest is coming back from minus 48 now to minus 9. This is probably a little bit old here. But we're getting back to that level where the retail interest is coming back in. So what does this mean for where we're at right now? Well, Bitcoin is pushing up.
You're edging me. God, I was waiting. Where are we going?
We're going up, baby.
Okay.
We're going up. And this line, I've talked about it a lot. It's all the way back to January, and we're just fighting. Everybody's fighting to get this up because why? Because there are big money players out there. There is smart money. There are whales. There's so much going on right now that I truly believe they're struggling to not let the price run away before these ETFs.
Yeah.
And so we're seeing this chop back and forth, which if you are trading this and buying up here, and then you sell down here, and then buying up, you're basically getting chopped out. All you're doing is allowing yourself to donate to people that already have a boat to buy a second boat. So be patient here because this chop is going to happen a lot. But I'm watching this level right here because no structure has been broken yet. I'm watching this 39.5, let's call it 40,000. And if we take this out, I do think we're going to have another explosive move up into the $45,000, $46,000 range. And the question is going to be, do you think we're going to hit that golden pocket up there, the 48 to 50,000?
I mean, anything's possible right now.
Yeah.
We're watching this max pain price and the option expiries today. So if they don't go through, it shows it doesn't matter if we have market imbalances or liquidation grabs below us. Markets are bullish, and the audience and the retail are just tired of being silent and being tired of being pushed back from these market manipulators. I think that's a big driving factor behind this and the bullishness in these markets. You know, I wish I was in the room when I saw the people that were really behind the pursuance of this, of these crypto regulations, guys. You have to realize these legislators, when they're going after like a CZ, there's a lot of bias to this. I talked about this a little bit yesterday. You don't know if they're actually holding a competitive currency. You don't know if they're holding Ethereum or favoriting Solana or favoriting, XRP or any of that. You have no idea who is actually pursuing these regulations. These DOJ people can literally be holders in the crypto market. And
or just further anointing Coinbase as BlackRock.
Could be. It could be, right? Yeah. And we don't know what that dark money or what's beyond the scenes is really taking place, but we know the narrative. And that's financial institutions manipulated us in the 90s. They manipulated us in the 2000s. They propped up the real estate market. They completely printed trillions and trillions upon trillions of dollars through COVID. We were lied to. We were censored. All these different things took place. We're just exhausted, and we know the solution. But back to the charts. I'll just keep ranting if we don't.
I wanted to go back because we were talking about where we're coming into the halving, and you were talking about supply.
Yeah.
This could be a little bit of a lesson, but we all need to hear this. The most important thing to understand how markets work is supply and demand.
Yeah.
The most beautiful thing in Bitcoin, in contrast to every monetary system that's ever existed before Bitcoin,
market cap matters.
Market cap matters. And fiat gets printed to zero, always. Even back when they didn't have printers, they had coins in Rome, and they would dilute the coins to having less and less and less of the actual the precious
Gold.
metal that was in it. So that's essentially printing fake money. With Bitcoin, you have this. Not only do you have the programmed reduction in supply every 4 years, but we've also seen this shift since the third halving back here at 2020. There's been a shift. This orange graph right here there's been a seismic shift where there's actually less available supply happening over time, not only because of the halving, but also because more people are seeing the long-term potential of Bitcoin. There's larger holders. I think Bitcoin is going to be something that people are going to use for equity in the future. Yeah. I think that Michael Saylor is going to be one of those people that has a huge holdings of Bitcoin and is going to use that to lend it out, to borrow it. He's going to make money on his Bitcoin, not only because it's going up in value, but because it's the best asset ever. And we're seeing this seismic shift in addition to having another reduction in supply. Now, I do want to say that there's a lot of things happening right now. We have the bullish setups for Bitcoin moving higher. We have Ethereum's also looking quite good. We're seeing volume. This is very important. Volume is agreeing with this move to the upside. So that doesn't mean that we can't get those flush outs to the downside, because this is the ultimate chop zone, probably more than we've ever had in the history of Bitcoin, because so much is on the table coming into this next halving, more than ever has. The institutions, mom and pop, we are now in the zeitgeist of the world. Yeah. People are aware of this. So every dip that happens from here, I am a net buyer. I do want to say, you were given a giveaway at some point today, right?
Yeah, so just quick reminder, guys. $1,000 in Cardano is going to be going out. We're choosing the winners Monday. So make sure you guys go on the previous video or this video and just spam 1K ADA in the chat or in the comments below if you guys aren't in the live stream and watching this later on to enter for that. We're choosing the winners on Monday. We'll be entering everybody manually. So make sure you guys spam 1K ADA in the comments and chat.
And it is Black Friday. So shout out right here. We have a huge deal going on for BitLab Academy. Join us in the Academy. You can get 50% off for 3 months for the BitLab All Access or the Pro. This is how you understand how to read the charts, how to trade, but also have access to the premium Discord. And if you go, I'm going to share this I'm going to share this link, Control C, in the chat here. And if you all go and retweet this on Monday's show, I will randomly draw and give 3 people lifetime access to BitLab Academy. So go ahead and retweet that, join, use that code 3for50 for 50% off for 3 months. That's what I got there. Let's jump back in. There's so much more to talk about today.
That's it. So guys, next up we have the infamous Tom Emmer, guys. I subpoena for SEC Chair Gary Gensler popping up on here. Crypto roll. So essentially Tom Embers, guys, this is a congressman that has been providing an extensive overview on the current state of cryptocurrency regulation and the role of the U.S. Securities and Exchange Commission. Let me go ahead and zoom in here, make sure I can get this over to the screen for you guys. Boom. Perfect. Look at that. Look at that magic. Emmer's insight comes at a crucial time for digital currency markets, which has seen increased scrutiny and involvement from federal regulators. A focal point of the interview was the potential subpoena against SEC Chairman Gary Gensler. He is being attacked. While Gary Gensler attacks us, there is McHenry and a few different congressmen and chairmen that are going after Gensler and his involvement in allegations with FTX, a major cryptocurrency exchange. Shifting the focus to the legislative landscape, Emmer conveyed optimism about the progress of various cryptocurrency bills in Congress. Notably, he mentioned a bipartisan bill to prevent the creation of the central bank digital currency, which could mirror the surveillance tools used in China. And for you guys in chat really quick, the FBBA, which I work with, Florida Blockchain Business Association, they actually are the ones that passed the anti-CBDC bill. So if you guys are in fear of a central bank digital currency, I'm going to give you guys some alpha here a little bit. Be more worried about stable coins and pay attention to that sector, because while everybody is scared of a central bank digital currency, we've already set up the legislation that forces, if the feds ever want to launch their own currency, they have to sue the states, and it would go through all of these politics and court filings and everything, and it could take years for them to ever even be able to issue such thing, let alone states not just completely banning them in general. So, I'm not too concerned with the CBDC. I want to watch out for the AML, the KYC, the on-ramps and off-ramps as we've talked about a lot with USDC as they pushed out Binance USD and competitors from the States.
You know what I got to say I'm grateful for today on this week of thanks and giving? I'm grateful that the shift that's happened over the last, I would say predominantly 6 years, where complete negative, pervasively negative in governments and thoughts and the basically the mainstream media narratives. But now the discussions that happen, not just in the US, but the world over on the floors of every different parliament, government bodies, mainstream media, and we have people. I'm grateful for people in there like Tom Emmer who are taking the charge in some meaningful direction rather than just listening to all the negative stuff that's out there.
Yeah, 100%. Just Tom Emmer, please stop inside trading. That's all I have to say, with our politicians. But I agree. It's this positive momentum in the markets. And, that is where we're coming in. That's why we're getting involved with Web3 policies in these committees, because we are the people and we need to represent the people. People are very progressive libertarians in the crypto sector. They want free markets. And you have to realize that in a free market, institutions are allowed to compete too. So we need to stand up and start advocating and speaking out a lot more loudly, and actually proactively focusing on this. So I'm excited for it. But guys, 100,000 Koreans to test, unfortunately, a CBDC, not in the United States with the digital yuan. So there is central bank digital currency still coming out. This is why people are very bullish on a lot of these ISO tokens or these tokens that provide that interbank communication. But in an effort to embrace digital currency, South Korea is set to launch a pilot program that will enable 100,000 Koreans to use digital deposit tokens based on the central bank digital currency, as reported by the Korean Times. This initiative, a joint operation by the Bank of Korea, BOK, and financial authorities, marks a significant step towards integrating digital currency into everyday financial transactions. Under this pilot project set to commence in late 2024 for Christmas next year, selected participants can purchase goods and using deposit tokens issued by commercial banks, functionally similar to vouchers. The recruitment of participants by the central banks is expected to happen around September to October of the following year, with the project running out in 3 months. Now, the BOK anticipates that a CBDC could effectively address current challenges faced by existing voucher systems, such as those used during COVID-19 or for government's childcare grants. This digital approach could significantly mitigate high transaction fees, slow settlements, post-transaction verification limitations, and fraud concerns. Now, what I want to say about CBDCs, guys, there is benefits to them. There is pros. There's just also a lot of cons. For example, if you guys are going on unemployment and you guys can't get a job in a high interest rate based economy because you don't want to go work 3 jobs that all pay $12 an hour each and work overtime and just completely break your own back, the central bank could essentially be like, hey, you know what? We gave you this money, but they can put a programmable expiration date on it and be like, hey, you have to spend it within 3 months, forcing you to spend in the economy, which is further fuels and buys news boats, like you mentioned earlier, for these elitist groups. There's a lot of programmable issues and control over all of your transactions, etc. Now, the pros to this, and we do need digital currency, we need to move away from cash. Cash is nasty, first and foremost. 95% of it has traces of feces on it. It's literally the most disgusting thing in the world. Again, it's really hard to track. It's not cost effective. It's very bad to print. It's very bad for the environment to create. And so there is this benefit of global transactions and cross-border settlement systems. And unfortunately, even though there's projects like the XRPL or Quant or XDC that are focusing on these things, even through Bitcoin, even through Ethereum, it's a free market. So if you want a free market, that means all players are going to play, and there's going to be this kind of level playing field. And that's where we're kind of, just fighting back against all these CBDC challenges. And yeah, I don't know if you got any thoughts on that, but I
agree. And I just want to shout out because, I'm somebody that's held and traded, and I still have some long-term XRP. Quant also at an incredible price right now. But one of the things that I am absolutely aware of is that XRP and Quant are 2 great examples. While I like them both a lot, I think they're great projects to hold and trade and make money on, I don't have a huge vote of confidence that one or the other, or even either, are going to necessarily endure through when big banking truly starts getting involved in the crypto. We already saw JP Morgan roll out their own coin, doing $1 billion+ in transactions a day. What's going to stop Citigroup? What's going to stop Deutsche Bank? What's going to stop the Bank of China? What's going to stop every bank out there? Because the only thing that's really holding back SWIFT and all these other things is the fact that they just chose to make that a 2-week delay. So there's very small changes that need to be made in the current system that will completely displace the need for things like Quant and XRP. So while I like them, and I do think they do have a chance of really enduring into the future. I don't think they're going to be this huge market share like some people are like, XRP is going to displace Bitcoin. And like, well, you don't understand how supply and demand works then, because the two different levels there already tells you that that's not the case. So the point with all that is CBDCs are going to be something that's integrated. Governments are going to be getting in on this game. Big banks in the traditional finance system is going to be competing as well once they get their head, yes, I'm going to say it, out of their asses and realize that the digital blockchain technology is the most impactful technology I think that's come around since the railroad.
100%. I completely agree. And we have a lot more bullish news coming out today, guys. We have Silvergate Capital repaying all deposit liabilities in full. As they close down, this does show that, that was sustained for sure at this point now. What's that?
How big his hand is compared to his head.
Oh, right here.
That's incredible.
Yeah, that's AI right there, right? That's Mid-Journey.
Okay.
It's a little bit disproportionate, but what's not disproportionate is I'm finally repaying those deposits. We have Genesis attempting to recover $689 million from Gemini in a new lawsuit. So Genesis, this comes after all the Silvergate issues, a month after both companies were hit with a lawsuit from the NYDAG, the New York Attorney General. Genesis Global has sued Gemini Trust and associated users in an attempt to recover over $500 million. So the Winklevoss twins cannot get a break. They, got just totally beat down by Mark Zuckerberg. And now they're being sought after by regulators here, which again is looking for, Genesis Global alleges that Gemini Trust received more than $689 million in withdrawals in the 3 months before the crypto lender filed for Chapter 11 bankruptcy. So more sus things taking place here, but James' office alleges Gemini and Genesis Capital conspired on 2 fraudulent schemes with their Gemini earned product, resulting in investors losing more than $1 billion in November 2022 when withdrawals from the platform were suspended, and DCG Digital Currency Group coordinated with the companies to perpetuate the scheme the complaint alleges. So we'll see how this unravels. If this actually ended up being true, I'm just not going to say I would be shocked, but of course, guys, these are all allegations and speculation. So we have to wait for these proceedings to actually take place. But again, we just saw it happen with Binance, so it's not something that would shock me in the industry. And what's good is we're not reacting to that news at all. It's barely even scratched the surface. Binance legal issues could worsen as CFTC gets more aggressive. You guys should expect this. If you guys haven't watched Charles Hoskinson's debut, which I know it's in here in a little bit, we'll get to it. But essentially, guys, what's the next focus for these industries? As you guys are investing in the cryptocurrencies and building your portfolios for this next bull run, you need to realize what's being targeted, because that's going to let you understand what is probably going to be the sides of the industry that see the most amount of volume and significant gains. So right now, they're going after exchanges. Next is probably going to be non-custodials, or it's going to be at least, other stablecoin providers, which could disrupt TVLs. It could disrupt, AMLs and on-ramps and off-ramps and certain projects, etc. And then it's going to be the hot walls and DEXs, in my opinion. They will probably pursue any exchange-tied decentralized exchange, quote unquote.
Well, you know why? That's absolutely a fact. Because, just like we saw with Jerome Powell over the last 2 years, it's one of the first times in history I've seen the government telegraphing exactly what's happening. He says, we're going to be raising throughout this year. We're not going to have any pauses. And he did that for a year and a half.
Yeah.
And now with Janet Yellen, she said, I watched the whole press conference. And by the way, shout out to the exchange that I've never heard of, Binance.
Binance.
Yeah, Binance. She said it probably 400 times. And it's just like, you obviously are not aware of anything in this industry if you're calling it Binance. But she telegraphed that her and I forget the chairman of the CFTC were saying that one of the areas that they're going to be targeting is AML, which is anti-money laundering laws. And that brings some focus and concern onto the DEX ecosystem, because DEX ecosystems by nature in some aspects are quite very anonymous, right? And the no KYC, all these different things are something that DEXs are known for. So that begs the question: are we going to have any sort of run again in the DEX ecosystem, or is there going to be a shift away from the narrative of DEXs being something that we truly want to be involved with in terms of an investment for the coin, like for instance the Uni token, or like what's going to happen to the volume there?
I think it's going to see a progression of a mass influx as Binance and exchange DEXs get pursued first, because you'll probably have non-custodials attacked first, because that's kind of the immediate, like a MetaMask, right?
So
like these
we're
hot
gonna have
wallets.
a little mini wave from it. We'll have a little mini bull market.
Yeah.
And maybe maybe the last one for the next cycle and a half or two.
Yeah, and the CFTC came out and said this, and we don't know. There's going to be a huge battle against this, guys, between the DOJ, the CFTC, any financial regulators, etc. But the CFTC said that they're going to pursue legal action against crypto exchanges that violate the country's trade laws. Romero emphasized that operating the U.S. market should be viewed as a privilege rather than an inherent right, emphasizing the expectation that all entities, including non-U.S. companies, will strictly follow the law. Now, what's really important is that in his statement, guys, he also stressed the issue of VPNs and potentially completely banning those, making it maybe illegal for even you at home to even access and utilize a VPN network because they want complete control over understanding who customers are, etc., and just having all of your information. Sounds like, that sounds like a little authoritarianism right there, brother. But according to recent posts by WhaleWire on X, formerly Twitter, the US CFTC has also highlighted the far-reaching implications of the ongoing Binance case, saying, Justin, CFTC says case against CZ and Binance is just the beginning of an aggressive pursuit, which I don't know if he got this from, he just decided to push that out. But that's also going to get into Charles Hoskinson here for the Cardano's holders and what he tells us later in today's live stream. But substantial risk of flight posed by ex-Binance CEO. Prosecutors say in a filing seeking to bar CZ from leaving the U.S. They do not want him to leave. They do not want him to go to the UAE because they can't seek extradition, and just kind of evade these policies and laws. But Zhao successively swayed Judge Bryan to his side by arguing that he should be able to go back to the UAE because he already posted bail. After considering these arguments, the judge ruled that CZ is allowed to return to his home in the UAE pending sentencing pursuant to appearance bond secured with the collateral described above. So again, just that story's unfolding. We'll keep you guys up to date. Now, here's Charles Hoskinson, guys, laud CZ as greatest crypto entrepreneur. I don't necessarily agree with a lot of the things he said in his fireside chat because he's talking about CZ being this financial innovator, etc. And you guys heard yesterday my thoughts on CZ. I think, all bad actors are bad actors and need to be held responsible. Did he bring a lot of crypto adoption? Of course. But did he put growth versus compliance, which was more of a focus on the safety of their investors? 100%. That's where they propped up a lot of the value. And there's a lot of things early on that they need to be held accountable for. Is Binance a successful business today? 100%. I don't believe it's going to go anywhere. And I think that they have a substantial amount of revenue and have turned it into a really good company. But that doesn't mean everything that in the past is something that we should martyr or something that we should idolize because this next cycle, guys, whether it's CZ or the SEC, they both have their issues. And one person made billions off retail investors believing in him as someone that's going to help regulate this industry, which has nothing to do with the United States. And then, of course, the other side of that is we have regulators that are just, forcing favoritism on their favorite cryptos and enforcing actions on people like CZ. So
not only
both are there.
Not favoritism on their favorite cryptos only, but also favoritism on their chosen industries. Because if I don't want to say the three-letter agencies, I don't want to say some of the things I'm going to say, but you can figure it out. There's some, there's rugs down here, and there's D rugs, and there's money laundering, and hundreds of billions of dollars in the traditional banking system. JP Morgan and Citibank and every traditional bank out there, hundreds of billions of dollars that are known to be money laundered profits from those drug trades out there that is sanctioned by the U.S. That's sanctioned by, what I mean by sanctioned, they're allowing it. It's been going on for a long time because it's a chosen industry they have partners with that's allowing them to profit on it. So it's just pretty crazy.
Yeah, chat's here saying he sacrificed his freedom for. I would say yes and just like no. I'm not going to idolize it, but there is what it is. But either way, guys, CZ or Charles Hoskinson kind of said what to expect in this fireside chat following the eventful week that we saw Binance pay $4.3 billion fine to the U.S. And plead guilty for criminal charges, which is where I don't leave that out. The Cardano founder recalled the days when people traded Bitcoin with spreadsheets and used not-so-friendly trading platforms such as Mt. Gox and local Bitcoins. Rating CZ's position among other entrepreneurs who have worked in the crypto space, Hoskinson admitted he was one of the greatest entrepreneurs of our time in the industry. The Cardano founder believed that CZ rightly earned that title as Binance under his purview moved trillions of dollars worth of value. And actually right here, he calls this is the end of the article, but he actually goes into, let me scroll down. Actually, it might not be the end of it. It's the end of the era. So there's a little bit more here. So he calls it the end of an era. And what Charles Hoskinson warns his community is the progression of regulation. It is the progression that, hey, the old times that they were using, which was growth before compliance, is no longer going to be a thing. It's going to be compliance before growth. And we need to start innovating and building tools that make sure, as he mentions, decentralization's a scale. He says this in a video, a topic that a lot of these great innovators, and I believe Charles Hoskinson is 100% a legend in this industry. You know, a lot of the industry is propped up about decentralization, breaking away from that government, completely cutting out that middleman. And we have to realize that this is a complete scale. As I mentioned earlier in the stream, this is a free market. Institutions can come in, and he's building a product that he talks about in it called Midnight. I haven't looked too much into it, but we have to do things and innovate to make sure that institutions don't come in and monopolize this industry. So the three things, guys, here, the three risks that you need to watch out next cycle, in Charles Hoskinson's perspective, were hot wallets, of course, exchanges, and I believe he said the decentralized exchanges as well, being targets from financial regulators.
And, you know, I think that some could argue that, you know, this idea that, and you know, it's brought up in the DOJ press conference as well, and the evidence they had against him is that his compliance officer was basically, they're having conversations, and it's better to ask for forgiveness than it is to ask for permission. And I think one of the things that I do want to give CZ credit for here is that I don't think, even if you're on the other side of this and think CZ did all these bad things, I think what people are failing to realize is that this is such a new asset and such a new asset class that it's very similar to when cars started becoming available, for instance, in the UK. And there was this worry, you know, when they had regulations for horses and cars and all this kind of stuff, that all of a sudden, in order to have a driver's license and to own a car in the UK, you had to have 3 people walking with flags in front of your car. You had to have an engineer in the car. They're basically regulating it into, you had to operate it very similar to where it would not be even as effective as just having a horse. So it was a different type of machinery. It was a different type of technology. And then what happened very soon after that was that regulation went away. And so these rules that were in place from the legacy technology of the day, which was riding a horse, all of a sudden became irrelevant to a car. Yeah. I think in some ways, a lot of people that really understand blockchain and really understand, especially Bitcoin, were expecting that as these government regulators started looking at this, they would see how different it was. So although these rules do loosely exist for the traditional finance system, there was at least some hope or speculation that clearly there's going to be a different set of regulation that's going to be developed for Bitcoin and the crypto ecosystem. So I don't think CZ was just trying to break it and then ask for permission or ask for forgiveness. I think there was some expectation that, do you not see how brilliant this is? This needs a different set of regulations.
Yeah, and I do think there's a side to that. So my perspective is this, and I think this will make it a little bit clearer for my thoughts and how I think, guys. And for you guys that don't know, I'm Joshua Jake. I'm here full time now as a creator. I'll be moving out here in January, helping host these live streams. But it's honestly just late stage capitalism at this point. And my issue with it is that CZ is a guy that came into this industry, saw this innovation, but unfortunately, he came into a system that was already broken, that was already corrupted. There was no regulation. There was no clear path towards regulation. And of course, you know, this is years and decades of what have led up to this process. The lack of clarity, the lack of regulation, the focus on lobbying from our politicians and institutions, monopolizing the industry. We went from hundreds of government contractors for military to 5, right? Boeing, Raytheon, Lockheed Martin, et cetera. Same thing with pharmaceutical companies. Same thing with insurance companies. Same thing with real estate companies.
Consolidation of power.
And it's going to consolidate again, I believe, in crypto. And that's kind of like my perspective is this, and maybe it's a millennial thought process is, you know, that's what I want to change. People that are going to be leading innovators and thought leaders and critical thinkers in the space. I can't prop up and hold somebody as a messiah that was still committing illicit activities and knowing so when they could have, and they knew and understood that this industry was already corrupted. We need to make that better. We need to pursue that. And it was this, you know, is there a benefit to what they did and bring that crypto adoption in? Of course. But that benefit in that road they decided to choose, 100%, and you cannot argue this. There is definitely thousands, if not hundreds of thousands of people out there that lost money, you know, refinance their homes, etc., because of this road that we chose. And so that's kind of the next progression. That's the next era I believe we're evolving into crypto. And I'm very bullish on this because I think we're molding out of that skin. We can't have the same repetition of crypto influencers in 2021 or 2017. With my years of experience in crypto, guys, it's like we can't have these people completely being VC palmed, popping up these security tokens, advocating for some 17-year-old kid's NFT project that's anonymous, lives in his mother's basement. It's going to totally pull the plug on it. You know, we need to approach that right crypto adoption, the right crypto education, and we need to start representing ourselves because nobody's done it for the last 50 years. So that's kind of my head at that.
I got something here too.
Yeah, go for it, brother.
All right. So, here, this is all jacked up. So, all right, the time frames, you got to think about the time frames. November 15th, the Pentagon failed its 6th audit for $4 trillion. And the DOJ all of a sudden has this hill to dance on that they took out the big bad man CZ while all this is going on. And additionally, BlackRock's meeting in the background with Coinbase and the SEC on the spot ETF approval. It just seems like they have a very clear control and demolition plan that they've executed. And now they're going to dance on its hill for a while.
Yeah.
I'm a fan of the power of decentralized problems, being so decentralized that it's hard to regulate. And I think that we're on the cusp of being there.
Mm-hmm.
So there's that to keep in mind. You have to have the infrastructure to actually gut the systems if you intend to do so.
Yeah, and that's why we're in crypto. It's what makes me incredibly bullish on Bitcoin and the technology and the AI and all of this that is being built in layer ones and layers. I'm excited for the tech. And that's actually, some people might think that's like fearful. It's like scary. It's like, no, that's the way I view the world. This is the solution to a lot of these problems. It's a solution to fractional banking. It's a solution to corruption. We just need to make sure that this time in the same free market, I believe in free market, that we make sure that these institutions don't come in again and monopolize the industry. But this leads us into the next article here, guys, that SBF housed with ex-Honduras president in jail is trading mackerel and giving crypto tips. So SBF, guys, went from trading customer funds to trading up fish for haircuts in prison. The newspaper said that Bankman Fried, curly-haired Q-tip, dirty-looking, been placed in a dormitory with Juan Orlando Hernandez, a former Honduran president who is awaiting trial over acceptance of bribes from drug traffickers. Both appear to be on good terms, and Hernandez's lawyers said that the two inmates have had cordial conversations. The Wall Street Journal said that Bankman-Fried's difficulties in accessing vegetarian meals and ADHD medication in prison, it has been resolved. So, guys, he's getting his nice little kale and his little asparagus, and he's got his ADHD. I don't even know what medications for that.
Cucumber.
I feel like a cage, like a jail cell, would be the perfect cure for ADHD because there's not a lot to look at and focus at. So maybe just going crazy in there. But either way, guys, that's funny. And again, though, I don't put it all on SBF. I still think there's a lot of people behind the scenes that need to go with him. But still, hey,
I mean, I completely agree. How focused do you want to be when you're?
Yeah.
The question.
Yeah, exactly. But we need to see his parents in that box too, guys. Moving on here, we have Montenegro court clears path for Do Kwon's extradition to U.S. or South Korea. Another fallen scam artist, essentially, that developed the algorithmic stablecoin, which is why I keep warning you guys about Justin Sun with USDD, because he also launched a stablecoin algorithmic-wise right afterwards. And I do think that's the next one to go. But guys, Kwon expressed consent for extradition to South Korea. The courts couldn't grant this request as the decision relied on the international law. U.S. authorities establishment of the legal basis of extradition influenced the court's decision on this destination. And guys, this is just good for the industry. I think the prosecutors going after this is actually healthy, guys. This is going to clean up the industry and make it a little bit safer. But again, we just have to make sure we're standing our ground and don't allow these regulators to enforce this regulation. There has to be a balance here moving forward. Getting into some altcoins here, though, guys, I'm excited. So what are modular blockchains? That is a big word here. This is Celestia, a product that was pumping pretty massively here over the last few years. But this is a blockchain ecosystem, guys. This is how you need to pay attention and research in these crypto markets. Moving forward, guys, if you want to make money in crypto, a lot of the times you really have to be early. And so a lot of these people that are coming in 2021 or 2023 that are newer crypto investors, they're going to look at chain links and XRPs and top projects and say, oh, well, this is a dollar token. It could hit 30,000 like Bitcoin. And the reality is, no, a lot of us that made 50, 25Xs in this last bull run and the last few bull runs, we got in at these products when they were just a few $1 million market caps or maybe 100 million max. And we saw the growth from 100 million to multi-billion-dollar token price. And so you have to take that into account when you're moving into this next run. And so this is a new industry, new emerging tech. And just like we had layer 2s, layer 1s, metaverses, trends, there's always a narrative. And this is one that's kind of expanding on these ecosystems. Many developers, guys, and researchers have committed countless hours to creating an ideal framework for their native token networks. Many of these networks are based on the original blockchain design approach, which one chain handles everything, otherwise known as a monolithic blockchain. Now, I'm going to kind of veer away from the tech, make this as simple as possible for you guys. But modular blockchains can specialize in 4 different functions: execution, settlement, consensus, and data availability. Execution processes transactions, stuttering there, but settles secures the transactions of destination. A lot of S's there. And consensus validates a transaction's authenticity and data availability in a public storage of transaction data. So what that says right there, data availability, these are like oracles. This is new technology. And as we innovate in the space, a lot of these underlying base layers are going to have the access, the storage, and everything that they need to operate, unlike an Ethereum that needs a bunch of layer twos and all of these, extra entities to help provide that data and consumption to these chains.
Well, it kind of reminds me of a different take on the AVAX model. Because AVAX has a split three chain. Yeah, the three chains. So they can basically funnel and segment the different types of transactions or different types of processes, so you don't bottleneck different types of transactions or speed on chain. In addition to also just all you need to do is pop up another node, and you can scale nearly infinitely for the speed there. But this seems like the next evolution and that's one of the things all you need to realize. As much as you may like a certain chain, this space is far from being done growing. So you might find something like this right here, this chain right here. Wait 6 months, there's going to be something that's going to displace it with better technology.
This is why we diversify, guys. And it's funny because Bitcoin was like touted as this old disgusting technology for like Ethereum and 2017 ICOs, right? That was like Bitcoin was old. Then in 2021, all of a sudden Ethereum was old tech. And now in 2022 or 2023 or 2024, maybe layer twos are going to be old tech. So we have ZK rollups and all these narratives. But you realize that a lot of these products do perform very, very well, guys. And that's why you need to diversify. But here's some pros and cons, guys. So modular blockchain architecture theoretically provides some major advantages. One, of course, guys, scalability. Two, they can be more challenging to build on compared to monolithic blockchains. So that's actually the negative there. But modular base layers are also designed to be highly flexible and promote interoperability amongst other layer ones and layer twos. Still a functionality that's really hard for the industry. There's a few blockchains out there touted as the internet of blockchains. But it's still not this smooth process. If you want that mass scale adoption for decentralized applications built on these networks, you need your grandma to be able to just log into a phone and not realize on the back end that application is communicating with every other system out there in the world, or a metaverse, right? You should be able to go into a metaverse and not have to bridge my NFTs or tokens over for 45 minutes. It should be a smooth, seamless project and transition, and that's what we're moving towards. So next up here, guys, we have Optimism. OP, let me know if you guys hold this in the chat, guys. Let me know what your favorite layer twos and layer ones are for this next bull run here. Optimism price increases, reaches pivotal level, and can it climb above $2? The OP price has decreased under a descending resistance trend line since its all-time high. OP did not break out of this key horizontal layer where there's a massive order block looking to be filled here. Do you have a thought on that one?
I mean, yeah, I pulled up the chart as soon as we pulled up the story. Yeah, there's two order blocks that are, we're dancing right inside of it right now.
Yeah.
And I do think and I have not done TI on this in probably 4 months. And as soon as I open this up, I already had that line marked out, the $2 level from previous price action. It's the previous lows. So it is a necessary sort of next step when price does get up into this zone. I'm not going to be surprised if this does reject first, find some support, and then continue through. If it does just blast through, I expect if we do come back down that it will be pretty strong support. But it is looking like it's trying to set up to push higher. But first step is until we clear the $1.90 area, we can't, obviously, it sounds like John Madden here. What we need to do is move the ball forward. Yeah, of course. We need to break this previous high before we start looking to the $2 and beyond.
Definitely. But anything's possible again here, guys. And you have Optimism base. That's like, this is the ecosystem right now from Coinbase that's being talked about a lot heavily. So, just pay attention to all the Bitcoin layer, or not Bitcoin layer twos, but any layer twos and altcoins out there. Layer two network Blast comes in third largest holder, staked Ethereum amid pyramid scheme allegations. These continue to rise, guys. Blast, a newly introduced Ethereum layer two network promising native yield on Ethereum and stablecoin holdings, swiftly secured the position of the third largest holder of staked Ether in just 3 days post-launch, according to on-chain data. Guys, if you don't know where the yield comes from, run away from it, okay? If they cannot tell you why there is yield being generated, look, guys, these systems need revenue. The miners, the validators, they need transactional revenue to continue to support that network. So if there's any yield or reward system, just ask where that yield is coming from. Ask where it's being generated. And seriously, if you're past that 5% mark, 5% APY, just know the risk factor it's going skyrocket.
Yeah, there's a common phrase in that. If you don't know where the yield comes from, it's from your liquidity. So it's from you.
It's kind of like this greater fool's theory. But there is functionalities out there with like DeFi lending protocols and providing liquidity to networks where you're going to get these rewards and these APYs. just make sure, guys, when you see any of these new emerging things, I was in 2021. I did the I went into the meme coin trend for a little bit, and I did like the Olympus DAO, the Time Wonderland, all those things that just blew up on Avalanche's networks. None of them are around today, and it worked. We made tons of money, but like then there's inevitable collapse, like a cascading effect, because it turns out that they're all Ponzi-nomics don't work. So just be safe if you guys are playing in these categories. Personally, again, you guys might have different thoughts. I look at these as very high risk. Allocate a very small portion of your portfolio. This is the type of token that, in my opinion, when you're going out to like have a night out, like calculate that. And if you're not going to go out that night and that's what you want to use to trade, you kind of go for it.
Yeah. And it's one of those things. It's not something that you just throw in, like you think of it like a savings account and I'll check it in 3 years. Because the likelihood in terms of, you see the percentage of how many of these have failed, it's like more likely than not even be around anymore. And you're going to lose all your capital. So rotate your capital into your long-term hold profits into Bitcoin and Ethereum or your own. Remember, if you're in this market and you have only profits on paper and you never take anything out to manage your life, to buy your wife or your mother or your father a gift, or to pay for life's necessities, then what are you even making money for if it's only gamified where you see it on a number screen once and you take a screenshot of it, the next day it's gone. Got to rotate that capital.
And speaking of the compliance, guys, DeFi Protocols Spool rolls out compliance-focused V2 to core institutions. So DeFi Protocols, guys, I'm very bullish on DeFi. They are starting to pursue that compliance narrative that we've been talking about all stream. You have Uniswap, guys, price skyrocketing as Uniswap governance proposes more voting power. And of course, this is just bullish in the sense that it's more delegation, more decentralization, representing not only that the community is driving and growing bigger through Uniswap, but Uniswap's also going to get a lot more inflows just due to the Binance FUD. We keep talking about this as Binance's BNB and PancakeSwap continue to kind of be flooded by these networks. You saw a lot of that capital flow in towards these networks, and I think DEX is still going to be a huge moving factor this year. We have Pyth here, guys. We talked about this a lot at the beginning of the stream, skyrocketing 28% after a very successful airdrop. And Pyth, guys, this is going to be, launching against high expectations, immediately captured the market's attention, and initially debuted with a market capitalization of $765 million. Guys, this right here, this is bull run activity. Yeah. This is bull run momentum. You do not have products launching at a near $1 billion valuation, in a bear market. It died down massively, immensely. You're lucky to see a meme coin go from like, a $0 to 500K when those things were going from like $0 to like $2-3 billion in a bull run. I'm kind of like spraying there, but we have Pyth here, guys. Airdrop strategy was a master stroke. Sus, distributing approximately 250 million tokens to its early adopters. This move rewarded loyal users and strategically placed over $77 million worth of Pyth tokens into the market. Huge impact, guys, here. Continues to expand, reach high fidelity data streets. This is just looking like it's just going to continue to move a little bit higher as we're in this bullish trend here. And of course, guys, this is that Oracle play. We're talking about providing data to perpetual contracts that Starbucks is kicking in. The perpetual contracts with synthetics here. Next up, we have Sony will use blockchain technology entertainment industry, baby. Let's go. Based on the collaboration with Astar Network and Sony Network Communications, a selection has been made by only 19 projects out of more than 200 applications. With this collaboration, the companies will work together to develop a new blockchain platform, bringing a new revolution to the entertainment world. I'm excited for this, and I've been speaking about this for a very long time. I'm waiting for your just Web 2 companies, whether it's a Disney or it's going to be a Sony or Lionsgate, whatever is deciding to come into this market, just building their own blockchain systems. They're probably going to be more towards that centralized perspective. But, we've seen it in the past, like Gala Games, right? This is a really big studio that was trying to pursue the music industry, trying to pursue the film industry, also trying to develop games at the same time. And I believe they're just doing way too much. It's that saying that doing too much, it could be too little, and doing too little can be too much. And it's like at the end of the day, we don't necessarily see any positivity coming out of this, as they've been inside trading customer funds for like the private jets. They had the whole issues with the NFT scandals. And so I've been just expecting this, guys. And it is bullish for gaming. It's bullish for the music industry. It's bullish for the film industry. I'm really excited to see what they're going to come in and build here. And this is going to be a part and with the Astar Network, which is extremely bullish for them. Startail Labs, a prominent layer. We have, go for it, a prominent layer in Web3 space is partnered with Polkadot-based Astar Network and joins entertainment giant Sony for a collaborative blockchain. So Startail Labs joined forces with Sony And they're looking to establish an innovative blockchain system, guys, here through a $108 million investment. More bullish activity, bullish for the decentralized film industry, decentralized music industry, etc. And then wrapping up here, guys, we do have, that was actually the last story here today. So we're going to take some Q&A just to catch us up, guys. I saw a lot of questions in. Some people were asking me about the IFC. I will not be fighting the IFC, guys. I am obviously doing Cryptos RS Plus with George, but actually I'll be moving out here, and I was actually anticipating it. I might be one of the influencers that really instigated this fight to actually happen at an event here a few months back. But unfortunately, the fighter I was talking to and the people that we were involved with, there wasn't a competitor. And now, fortunately enough, guys, I'm joining the team here full time. I'll be in Europe. I'm doing a lot of traveling, and I'm going to Capitol Hill. So while a lot of these influencers are just boxing up there, looking kind of lame, except Rodney. Shout out to Rodney. Love you, man. I'm excited for you to watch you. I'm going to be actually talking with some politicians and congressmen and pushing for Web3 policies at Capitol Hill around that same time. So I'm excited for it.
Well, you know what? There's some crypto influencers out there that are only in this for the entertainment aspect of it. We're here at Discover Crypto trying to bring true news, true thoughts, be thought leaders in the space to break down what's going on, to bring to all you. And I do see a question here from CMG. I can't remember where his name is. It basically is asking about selling. I thought we never sell. Diamond hands. Well, the truth is, here's the deal. Taking profits doesn't mean you have to fully take money out of the market. You can rotate meme coin profits into Bitcoin. You can rotate, if you have profits on some smaller altcoin that's pumping, say Caspa. Caspa had huge profits. If you took zero profits whatsoever out of that, be ready and okay if it does go to zero, but also be ready at some point to rotate capital into another asset to diversify, to allow profits from one portion of your portfolio to help broaden your diversification and have a broader exposure to the market to put yourself in a better, safer position in the long run. What are your thoughts on this idea of diamond hands never sell?
I don't follow that at all anymore. Yeah, guys. Again, coming from just as an influence industry for years at this point, it's a lot of these products that pump, 90% of the price valuation just comes completely from speculation and marketing. So, I have something, I call it the VC strategy. I follow a 50-25-25 rule that I actually learned from George way back when from Cryptos RS, and shout out to them. I am excited for the IFC and everything, by the way, guys. It's going to be it's going to be a really fun event.
It'll be fun to watch.
But, for my portfolio, I've restructured that idea a little bit where 50%, and this is kind of just because of how long I've been in the market, is Bitcoin, ETH, and then Polygon Matic, which kind of fell into that category just because of the gains. The next 25% is just really your large caps and mid caps. That's going to be my $500 to $1 billion tokens up to around 10 billion. And I'm diversifying into another 5-6 of those tokens. But the VC strategy of this comes to the 25% of that portfolio, that last 25%, where, a lot of people disagree with me on this, but I've seen it firsthand from the VCs and how they move funds and market these tokens out here. I might be super excited for play to earn gaming, but the reality here is, guys, if I like one project in that industry and I want to go all in, I don't ever go all in on like one play to earn game. If I even love it and I hate every single one, I'm still going to diversify my funds into like 3, 4, or 5 of those projects just because it's the VC strategy. You don't know which one's going to grab Twitter. You don't know which one's going to go viral. You don't know which one's going to have a massive partnership with the Sony or anything out there, because obviously that would be inside trading if we had that knowledge. So it's like, you want to be diversified in that. And that last 25%, I'm choosing 3 or 4 categories in that industry. One of my favorites is going to be Bitcoin layer 2s, as well as decentralized science, which shout out to my community, everybody in the chat. I've seen a few people talk at that or from our Discord. We've seen like 1,000% gains at this point over the last year from that. And that's because we were literally diversified into the ones I didn't like. I was like, we're just going to shoot money into these just a little bit. And, of course, that VC strategy has now allowed us to exit and then reaccumulate more in that 50 and 25%. So I agree with you. Diversification's key. And you got to treat this as like, don't be in it for the tech ever. If you can learn one thing from years of experience in crypto, is it's never for the tech, or else, Bitcoin would have, again, the most misunderstood asset, in my opinion, which has been marketed as this bad technology, as slow, as bad for the environment, is turning around 10 years later. The oldest crypto, the safest crypto, the most secure, the best commodity on the planet. Of course, that's kind of the ideas I have running into this.
Yeah. And it's good to remember too, you have to adjust your strategy and account for the different type of asset and how that asset fits into its unique ecosystem. For instance, there's different types of stocks and different things you can trade on the traditional market, but you're not going to hold Chipotle the same way you hold gold. You're not going to hold, you know what I mean? You're not going to hold Tesla the same way you hold some, GameStop, right? These are they're traditionally traded assets, but they have different long-term projections and also market shares and also authority within the different types of niches they have. So I'm going to treat my Bitcoin with a different type of strategy than I am going to treat Near. And I like Near protocol. I'm going to treat AVAX differently than I'm going to treat Ethereum. I'm more likely to take profit out of AVAX and put it into Ethereum because there's more of a likelihood because of the strength of market share with Ethereum to endure long-term than AVAX will. And I love Avalanche, but I'm going to apply different strategies based on not only the market cap, but what is the authority they have in the niches that they carry.
Yeah, exactly. And someone asked up here, we had NCR Legend, what about Arweave and price prediction? Arweave, again, you want to just decentralize your portfolio. Well, not decentralize, but diversify that portfolio. So I'm going to pull it up here for you. The token's going to be AR, guys. It's up quite a bit here on the annually. And yeah, there you go. Thank you for going full screen on that. 99% of the tokens in circulation. And this is going to be a project that I believe this isn't the Oracle. This is going to be a decentralized storage network, kind of similar to Filecoin. 100% it is. Describing itself as a collectively owned hard drive that never forgets. The network primarily hosts the permaweb, a permanent decentralized web with a number of community-driven applications and platforms. So if you like the decentralized storage industry, decentralized storage and scalability solutions are much needed. Ethereum and a lot of these layer ones would not be able to prosper without them. And this goes into that perspective. A lot of people that, super big fans of Filecoin, saw billions of dollars in gains over the last few years. There's now more emerging competitors. And it's the same thing with Chainlink, XRP Maximus, Cardano Maximus, Solana Maximus, Ethereum Maximus. It's like, guys, these are now billions upon billions of dollars. And you have to ask yourself, these people are advocating for 20, 30Xs. And we're now at a point where a 20 to 30X would mean a lot of these networks are either the same value as a MasterCard or Visa or a NVIDIA or just massive companies. And you have to just ask yourself, is there the revenue and the speculation that can prop it up here? Or are retailers going to do what they always do and get marketed to by VCs? And VCs are going to take now the billions of dollars they made and pour that now into a ton of other altcoins. That's why, guys, VCs take profit and then diversify into another 10, then take profit and diversify into another 10. VCs win because they are the beginning. They are the investors. They're the early investors. They're the pre-allocation, right? And then they pay all the influencers, all these companies, Fox News, all these mainstream media companies who pump the price of that token up. They make a ton of money. They exit on you guys, and they rinse and repeat that process 10 out of 10 times. So that's just the perspective that I'm kind of going off there. But
so I want to show before we wrap this out here in a second. You said you wanted a price prediction. We'll look at Arweave. This is a great opportunity to understand how to look at these charts. I got it up here if you want to throw it out there. Really easy way. If you're trying to figure out where's price going, one, it's always going to go one of three directions. And you hate to hear that.
Up and up.
Up and away. Now, so it could go up, down, or sideways, away. Right? So how do you know where it's going to go? Looking at no other technical indicators, look left on the chart. We're coming up right into this order block zone, which is also the previous highs. If we do retrace, I'm looking for it to come down here to the 625 zone, which also is an order block right in this area right here, Alt J. It's right in this zone, $7. If we do break up, the next level we're looking at is up here at this $13 mark. And it's more likely than not that if we do break up into this zone, first off, of course, we need to break this 943. If we break that, looking at the $13 range, and it'll likely retrace somewhere down into the zone back into the $10 range. And then, this is a newer project. And I think that because of where we're at in the market cycle, and you just said it perfectly, Filecoin has proven to be build a great ecosystem. Arweave is growing like crazy. And not only you have to realize it's not just the projects themselves growing, but you have to see as the world becomes more digital and as things take more data, you can also look at the projected growth of the need of that type of project's utility. And the need for the utility of these decentralized storage assets like Arweave and Filecoin is only going to grow over time. And so not only is the community going to grow with it, but you can also expect the price to go up, but it's going to chop along the way. So it's not going to go up only. This does look very bullish in the long term, and I'm excited for this. Yeah,
I agree. But guys, that's what we have for you guys today. I know it's a Thanksgiving weekend, so we appreciate everybody for tuning in today. If you haven't already, make sure you guys check out the Hit Network merch, guys. We got amazing Discover Crypto merch out there. We got the Bit Labs with the giveaway you did today. Do you still have that pulled up here? I want you to shout it out one more time.
Yeah, shout out. It's up in the pinned tweet. But if you head over to bitlabacademy.com, you can sign up there for the BitLab All Access or the BitLab Pro, which has They both have access to the premium Discord, to the courses, but then the BitLab Pro also has indicators on this right here. If you the link is right here in the description, but if you just go to bitlabacademy.com, you can also put in this coupon code 3 for 50. That's 50% off for 3 months. Come and join us. Get involved in our Discord. Join us in basically investing in yourself. Best investment you could ever make. So you can look at these charts and draw those roadmaps for yourself, trade effectively, and be a part of our community.
And that's what we got for you guys today. Thank you so much for joining me today. Kelly, chat, we love you, and we will see you guys this Monday.